Good morning, everybody. This is Chris Ruisi, and I'm here with Stephen Reed of the accounting firm of Cowan Contesky, and we're here in his lovely office in Tinton Falls, New Jersey. And I'm with my buddy Jim Farrell of Farrell's Business Bits. Jim is videotaping this, and you're going to see it on his program, and I'm taking an audio with Jim's help. That'll be a podcast on my website. But the subject matter today is employee theft, employee fraud. Steve has put together a great outline as to things business owners need to know about in order to protect themselves from this, because the losses, according to Steve, can be quite substantial.
Absolutely.
Almost, 5% of annual revenue, Steve, as you said?
5% of total annual revenues.
Okay. Do you have a lot of your clients get confronted with this, that you get involved in sort of forensic activities to find this?
Absolutely. We actually have a whole division within our firm that just caters to litigation support and forensic accounting. So it's, especially in this economy, it's something that business owners have to be aware of.
I was going to ask, in this economy, do people get more creative with other people's money?
They always do, yes.
Okay. Well, Steve was kind enough to put together an 8-point program for business owners to follow in order to identify cases where fraud might exist, and more importantly, to prevent it and to educate your employees on the importance of not doing it, so to speak.
Right.
So, Steve, let's get into the 8 points right away. And the first one you've given us is know your employees. What do you mean by that?
Well, these 8 points are things that are low-hanging fruit. These are things that business owners can do that are relatively inexpensive. And the first one is know your employees. Spend time to get to know your employees. Talk to them. Engage them in conversation. And through that, you may identify potential opportunities or risk for fraud. So if an employee is talking about issues such as their spouse just lost their job, or there's an illness in the family that might create a financial hardship, or if there's personal troubles within the family, all those things may be indicators to create an opportunity for fraud. Okay,
great. Now, the second point is employee awareness. If someone is going to deliberately defraud you, they're not going to tell you. But again, employee awareness. Expand that for us.
Employee awareness actually starts with the hiring process. So what you want to do is your due diligence. If you want to engage someone to do a background check on a potential candidate, Google the person's name, check out Facebook, Twitter, just to see what's out there. Is any information out there? As we all know, there's a lot of information out there on the net. It also means establishing set written policies for employees. Let them know that you consider this a serious offense and you're willing to take serious action if an employee violates your policy on fraud and theft.
Now, should an employer, they do that during the new employee orientation, everybody gets a handbook, but we all know handbooks end up in the bottom left-hand desk drawer of most people's desks. How frequently should an employer remind their employees about the importance of this?
Usually monthly. You just want to reinforce this every month and use examples. If there has been fraud or theft in the firm, share that information with all the employees, and that's the best example to deter. Because you can't 100% eliminate these types of things, what you want to do is deter and minimize your exposure to it.
Okay, great. Now the third, obviously an obvious one from your perspective, is internal controls. I often wonder with some of the folks that I meet along the way in terms of coaching them and their businesses, the lack of control. So how dangerous is not having internal controls?
Internal controls are really important. And basic definition of internal controls, policies and procedures to safeguard assets of a company. And those procedures should be in writing. Some companies like fancy flowcharts, others like narrative. Doesn't matter. Whatever works for you, that's what you should go with. And in there you want to document important things for separating segregation of duties. That's the key area, and that's the weakness that a lot of companies have. So you don't want the same person to open the mail, reconcile the checkbook, make the cash deposits, and pay your vendors. That creates an environment for potential fraud and theft. So you want to segregate those duties and divvy those responsibilities up.
It's interesting. I once met a business owner who was asking me if I would work with them, and I asked her about her cash flow. And she pointed out that her bookkeeper was doing an outstanding job of making sure all the bills got paid on a timely basis. She asked me to speak with the bookkeeper, and I did. And I came back to her and I said, look, I really don't understand bookkeeping, but I just think you need to get a forensic accountant in here. And she said, oh, no, you're just overreacting. My bookkeeper is outstanding. Fast forward about 14 months from that conversation, and I never took her on as a client. The bookkeeper was arrested for absconding with about $467,000 of that person's money. So
outstanding job, huh?
Outstanding job. Internal controls and an individual who showed creativity in the wrong way, if you will. Now, as an accountant for your clients, how often do you go in and check their internal controls?
Usually on a quarterly basis, we sit down with the management, talk to people in the accounting department, because businesses are changing, very dynamic, so you want to make sure that you don't come up with these internal controls and put them on a shelf and forget about them.
Yep.
You've got to revisit it on a quarterly basis.
So it's important that employers understand that their internal controls have to adapt to the current situation, changes in the market, whatever that might be.
Absolutely.
Okay. Vacations.
Kind of an odd thing that you would think, what's that got to do with fraud, vacations? But most companies, they don't have a written vacation policy. It's very important to have a written vacation policy and stress to your employees, it's important that you take your vacations. We want you to enjoy your time, be out of the office. And you do that for a couple of reasons. Number one, the employees earned it and they should take their vacations. But number two, you got to be a little leery of those employees who, for 3 or 4 years in a row, have never taken any time off. Your knee-jerk reaction as a business owner is, that's a very loyal employee, which could be true. The other thing that could be true is maybe they don't want to take time off because what they're doing might be uncovered while they're gone. So It's important to force people to take their vacation time.
I can recall many years ago I worked for a bank, and all bank employees, especially the officers, were required to take 2 weeks off continuously. And the reason for that was to go in and check their processes to see if, in fact, there was fraud going on.
Absolutely.
All righty. Interesting. Next, number 5 is financial analysis. Now, most business owners, when you say that, their heads kind of cock like this, and they wonder what the heck you're talking about. But from a fraud prevention point of view, what do you mean?
The business owner should read and understand their financial information, their financial statements, and compare it and look for trends. Do a 3 or 5 year trend analysis and look for anomalies, look for irregularities. And when you identify those things, you should follow up and say, why? Why is this changing? Why is this fluctuating? What's going on in my business? And not only compare your historical information, compare your financial information with your competitors and see how you stand up against your peers and your competitors with respect to your numbers, your percentages, and what you're doing, because that also might raise a red flag and cause you to go down a path and ask questions.
Well, let's stay with this, because I don't mean to generalize, but many business owners, when you talk about financial analysis, their knee-jerk reactions, my accountant does that. Now, what's the problem with that answer?
Well, no one knows the business better than the business owner. The accountants do come in, we have an understanding of the business, but we don't know the business as well as the owner of the business. So it's important for the accountant and the owner to sit down together and go through this financial information. And the accountant should be asking questions and pointing out highlights, and the owner should be doing the same thing as well to the accountant, saying, why did this number change? How come? I thought I earned more than that. I thought my receivables weren't that high, or I thought I didn't know that much in payables. So the business owners know basically how much money and what their financial situation is before the accountants ever come in and do the work.
Okay, now, on a frequency basis, once a quarter, once every 6 months to do this type of analysis?
We have clients that want to meet monthly,
okay,
and ones that want to meet quarterly. And so usually typical is quarterly, but we do have clients that just want to get together once a month for that comfort level.
Okay, good. And that's something you do as part of your normal client relationship?
Absolutely.
Okay. Bank statement control. Now, some people might think, well, yeah, they're in my bottom left-hand drawer. I got complete control over them. What did you mean by when you wrote bank statement control?
Well, as we all know, cash is king when it comes to a business. And a lot of times business owners don't pay attention to the cash. They take their eye off the ball. So what we recommend business owners is take a look at the bank statement, look for any unusual activity that's going on, take a look at the scanned checks that were cleared with that monthly bank statement. And also, when the bookkeeper or your accounts payable person gives you a stack of checks to sign to pay those bills, don't just sign and pay them. You want the attached invoice, take a look at that invoice. It doesn't take that long to do this on a monthly basis. And invariably you might have questions. Why are we paying so much for this? Who's this vendor? I never saw this name before.
Mm-hmm.
And it's an eye-opener for business owners to do that. And lastly, when it comes to banking issues, we don't recommend you have a signature stamp. That just creates a perfect environment for fraud and theft.
Okay. And how many people do have signature stamps?
A lot.
A lot.
A lot.
Okay. Gosh, I hope someone who wants to defraud somebody isn't watching this and goes out and suggests to their boss, we should have a signature stamp.
Yeah, a lot of them.
Okay. Tip line. Is this the, America's Most Wanted, call in and report somebody?
Pretty similar, but a tip line is a lot of times your employees know what's going on internally in your business better than you do, but they're just reluctant to bring it to your attention. So you want to make it as easy as possible for them to make you aware of situations that they think might be going on. Some companies establish an 800 tip line, some have an anonymous tip box, and it goes beyond your employees. You should talk to your vendors, talk to your suppliers, talk to your bankers, talk to anybody that you do business with who may have information which would cause you to think potential fraud is occurring or has a risk of occurring.
Okay. And last, you have hire experts. Obviously, this is a video for Steve and his lovely firm of Cowan Contesky. But how important is it to have experts on your team with you?
I can't emphasize this enough, but typically the business is the owner's biggest asset that they have. And they buy insurance to protect it, and they do things to protect it, but they don't invest money to protect against fraud. And if a business is losing 5% of their annual revenues, if a company's doing $1 million in sales, they could be losing $50,000. So, and that's each and every year. So it's worth to spend the money, hire the experts, get it done right to protect your biggest asset.
And what sometimes confuses the issue and causes business owners to take their eye off the ball is if they're in a growth environment, that 5% is, kind of gets buried in the increase in revenue going from year to year. However, in an environment we're in right now where revenues may be flat or at worst going down, that 5% becomes a real challenge and a problem for a business's viability.
Yeah, it really does. And I forgot who said it, but I'll use their quote, is it's not until the tide goes all the way out that you see who's standing there naked.
Yeah.
Okay, so when things are going well, it's easy to cover up and hide things. But it's not till you get tough economic times like we have now where business owners start to pay closer attention to their business.
Going back to my example that I mentioned before, when that lady learned that her bookkeeper had absconded with $467,000, there was no way to recover from that. No way to recover.
It's sad.
Yeah. Steve, these are all great points, but if I were a business owner, what would be the number one thing, or what would be the one thing, the most important thing on here that, by God, if you don't do all A, do this? What would that be?
Internal controls. Internal controls in your business is the linchpin to help secure your business and your assets. So you need to have the policies and procedures in place to safeguard your asset, segregate the duties, those types of things.
Okay, if you can't measure something, you can't manage it.
Correct.
Okay. Steve, if folks who see this video want to contact you to get more information, how's the best way to reach you?
Through email, and that is sreed, R-E-E-D, at cowancontesky.com.
Okay. Well, this is Chris Ruisi from the Coaches Zone, and that's www.thecoacheszone.com or www.chrisruisi.com. And I would urge you to get to Farrell's Business Bits, where you can see this video. I know Steve and his executive assistant, marketing person, Kelly, will be distributing this to their clients and prospects. But especially in this environment, losing money deliberately because you didn't pay attention is just not acceptable. So, Steve, thanks so much for your time today.
Thank you very much.
Look forward to seeing you.
Same here. Thank you, Coach.
We're a wrap.
Awesome job.